The Fed is winning at taming inflation. CPI, the consumer price index, fell to 2.5% in the latest gauge. We have trader Joe Tigay standing by. Joe, inflation information is now being added to the already rocky month of September for the market.
Thank you, Angie. You said it. September is a rocky month. This is a rough time of the year for the stocks historically. Seasonally, we're getting ready for the fourth quarter, very crucial quarter for stocks. And sometimes analysts or CFOs and CEOs like to downplay the expectations in the fourth quarter so they can more easily beat them when that happens. So this is what we're seeing so far this year. We've seen a rough start to September.
What do you think the Fed is likely to do at its next meeting next week?
I think inflation's getting a lot closer to the Fed's 2% target. It means they can start cutting. Now, I don't think we're necessarily going to see a 50 basis point cut. In fact, the odds are the futures traders are suggesting it's more likely going to be a 25 basis point cut. And for me, I think that's good. That's a sign of stability. I'd much rather see a 25 basis point cut with the economy holding in there, not collapsing as quickly as some people have suggested it's about to. So I'd much rather see a 25 basis point cut than the 50 basis point cut for me. And then it's going to come down to, can these jobs solidify? Can we turn this economy around and start seeing some growth again when these rates do come lower? So that's what I want to see. I want to see a gradual easing from the Fed and then a recovery from the economy as that happens. That's the soft landing the Fed has been hoping that they can produce. I hope that they can get there too.
Volatility is creeping up in the stock market. How long do you think that will last?
We've seen this all year long. People expecting volatility to pick up in the fourth quarter, especially around the election. So we've been prepared for that. We've seen this. That's been nothing new. What it has changed is that the stance from the Fed. Ever since Jackson Hole, the Fed has said they're going to be in a rate easing policy. They're going to be cutting interest rates for the next few meetings. So I think that's a big change. And since then, we've seen the yield curve start to go closer to flat, and then it's going to be steepening from there. We're going to have the front month below the back month. So that is what a steeper yield curve. If you go back in time, you go back historically, when that shifts happened, when the Fed goes from a tight cycle to an easing cycle, you see volatility pick up. So that's what I'm expecting for that, and that'll last beyond the election into next year for me. So I'm expecting to see volatility lasting for the fourth quarter through the first quarter of 2025, just because we're going to have a steeper yield curve, which means more volatility ahead.
We thank you, Joe.
Thank you for having me.
Go to businessfirstam.com for where to see our show on TV.